AI bubble hit hard this week. We got taken down a peg or two. A lot of people calling for the bottom today in the semis and the AI sector. A lot of people calling it over. We're going to dig into it today, see what changed, what's new, and follow on our plan. First, I need you to like this video, please. I need you to subscribe. Go sign up for the email at the website. But let's get into it. Okay. I'm going to share my screen with you. You don't need to stare at my face. I appreciate it. Thank you. It's nice of you, but you know what? Let's get to this stuff. Okay. For those of you who are just kind of joining on this one right now, this is my AI infrastructure bubble monitoring desk dashboard. Um, yes, it's a vibe coded dashboard. It's exactly what it is. I basically tell my agent, hey, this is all the stuff I'm thinking about. This is all the things that are going on. Look at this research report. Oh, this tweet was pretty awesome. Check out this document. I just brain dumped a bunch of things in there. Here's a podcast. Here's a video. Here's policy. Here's Dario asking to get cucked again. Great. Throw it all in there. And then come up with your, like, let's put it all together. Let's make it coherent. Let's make it so that of all these 10 million things that I keep throwing at you and keep happening in the world, you can take all that and organize it for me and monitor it. This is what AI is incredible at. If you're not doing this, this is like your second, this should be your second brain. You should have your Hermes. You should have your, the Iron Man Jarvis working for you all the time, doing all the stuff, getting it all organized. Just like, have you ever thought to yourself, you know what, if I just had somebody who would follow me around and keep track of all the random thoughts I had and, put things in order and kind of monitor stuff when I'm like, hey, I think this is interesting. Go find out if it's interesting, put it together. It's like having a research team at your fingertips, 100-person research team, 1,000-person research team that you pay millions of dollars a year for, except you only have to pay, I don't know, let's say you're using you can do a $20 a month subscription of these AI tools and get this sort of thing. I'm paying a couple hundred a month because I'm using multiple, but it's because I'm doing this stuff. This is what I do. Like I'm knee deep in it, and you might be too. But I'm also saying like this is super approachable for everybody to do. This is not something that is hard at all. And so let me just show you where we are. We are smack dab in the middle of the bubble, right? We're smack dab in the middle of the AI bubble. It is an AI bubble. We are absolutely there. There's no question about it. It's an awesome thing. We want to be in bubbles. Bubbles are things that create the the something that the next 100 200 years however long in the future we'll look back on and say this was a time that it was important. You don't look back and say the bubble that burst in the railroads really was bad. You're like, wow, society changed dramatically because of the railroad. Electricity, you don't say, man, the bear market from that electricity bubble was, geez, that was horrible. We should not have done that. You're like, of course we should have electricity. Of course we should have railroads. Of course we should have internal combustion engines, unless you're an electrical engine person. I mean, we had to get there. Of course we had to have the internet. Of course all things are great. Yes, they also do cause, yes, bubble bursting. And when it comes down, but the most amount of money is made in these bubbles on the upswing. And you know what? There's a hell of a lot of money that's made on the crash. And normally I don't really focus on the short side, but I will be when it comes time. When the evidence tells me that we are there, then I'll be shorting. Right now, it's time to be long. We're in the bubble. Now, what I do every day here is I go to my desk dashboard. I see what's happened in the world according to technology, AI, policy, everything, macro, and it all lives in this dashboard that we're looking at on my screen. What it does is it organizes all those different thoughts, and if something new happens, it takes it in. Does it re-litigate my thesis? Does it change the thesis? How much did it change it? If it changed it, 1% or 27%. These things are incredibly powerful. These things that happen every day. Every day something new happens. Sometimes it's just like, it's kind of cool. Some days it's like, oh no, this is the worst thing ever. And some days it's like incredible. And we have a step function change and we're completely out of there. And so monitoring it every day, it's kind of hard. to have the first of all have the intention to do it and the focus to stay up on it in addition to everything else you have going on in your life. So build this tool. Go open up your AI, and if you're just kind of getting going on it, open it up and say, hey, I want to build a dashboard, or I want to build a place where you can like keep track of all these different things and like keep me up to date and let me know what's good or bad. And then say, now turn it into a website that I can look at on my computer. And then you can just keep adding to it and doing what you need. You can leave it. You can be like, oh, that one sucked. Make a better one. It's just incredible. Now, if you're like me, you probably have multiple models. You've got multiple data sources. You've got, lots of computer going on in your house, in your office here. So I probably don't need to convince you of that. But for those of you who are not using Codex, Claude Code, Hermes, OpenClaw, or any of the major platforms with the agentic harnesses around it, I think you really need to start, get on board with that. And it's not hard. You literally just ask your AI to help you figure it out or do it for you. Really, just do it for you. Computer use in Codex is incredible. It'll just do it. And so now I have this Hermes thing. So Hermes is this AI agent that learns, which is kind of the coolest part about Hermes. It learns you and it updates itself every time you do something with it. So you don't have to keep like telling it what to do and what you want and other things. It has that like, oh, we just had this conversation 3 weeks ago. I remember that. But in the meantime, we've had a few other things and, things have changed and I've kept up to speed on it. So it's super cool. Let's go to the desk. First things first, I moved since yesterday's video. I adjusted my desk here, my dashboard we're in earnings season right now. So we're getting a lot of really good information about some of the more, like, it's easy to sit here and watch these model releases and new new research being done and new discoveries and all these new things, right? That's one part of the AI bubble. But one of the, if we're investing in it, if we're trading in it and we're involved in it, we're a participant in society. Like, it's going to be, it's going to affect everything when the bubble bursts. And it's probably going to be horrible for, a while. But so we need to know what's going on. We need to be, involved. As we come into earnings season, you have basically due to regulation, CEOs and companies can't really talk about certain things unless they report it to everybody. And they don't want to get sued. They can get sued. They can get by shareholders. The SEC can go after, and there's a bunch of ways that CEOs and officers of organizations, large shareholders, board members, and everything like that, can get in trouble by talking about stuff. So they usually hold it to like their earnings report, and they talk about things on that earnings call after they report. That's kind of one of the main ways that information is brought in, and it's brought in like as a whole. You get all of the information for the quarter, pretty much, with forward guidance and things about what's happening. Now, like I said, it's super exciting every day when you get a new model release or you get some new technological gain or research coming out. That's great. But for the bubble and where we stand within the bubble, we need to understand the economics of the AI bubble, right? We need to understand, is money being spent on infrastructure? Are profit margins still high? Are lead times the same? Are they different? Are we focusing on, the bottlenecks of power? So power is like an external thing holding up bottlenecking the AI build out, because the power coming into the data center, right, is kind of outside the data center. Or is it inside the data center where, you have memory and storage and networking and cooling and HVAC and electric, all the components, servers, racks, all those things inside. So like, is it there? Is it there? Where in the supply chain are the bottlenecks? And are they just this company, or is it across is it just Taiwan Semi who's having an issue with this one thing, or is it like every fab out there that's having an issue with it? Is it Anyway, so that's what we're trying to do is like as we come into earnings, it's really important to focus on what is happening. Now, it's I'll put it this way. It's only important because everybody who is going to move the market, whether they invest in or out, right? Pull money out, put money in, move money around. That's going to cause prices to change of the stocks that we're the companies that we're investing in. And look, it's that's it. We're here. I'm here to make money. I am here to make money on this big tech boom, putting money in. So, our capital as investors, we invest in these companies and that money is used to, um, by the businesses to go out and do other things. Go out and buy other companies, invest in new data centers, buy new equipment, hire new staff, all, whatever. And so, me and my little measly accounts, not doing very much of it, but all of us combined is. And so it's really important to keep track of that. If all these other factors weren't really that important in the AI build out and it was just, was just a momentum trade or it was just a technical analysis solution to it, great, we'll go that way. But it is very much, big money is moved on these things and big money makes the biggest moves. Now, I've always made the most amount of money in my life in the markets in the bubbles. So I kind of, just kind of do well within the bubbles. I do okay here and there. It's not horrible, like 20 something percent compounded. Um, but compared to what you can do in a bubble, 1,000% moves happen regularly, 10, 20, 30,000% account gains are, like they're there, they are available. And so being in the right place at the right time, being heavily involved in those is has always been the thing that has done historically really well for me, not only on the upside, but also on the downside. And so that's why I'm like Mr. Systematic Trading. I got all the trading algorithms out there working for me and everything like that. They're just doing their thing. I don't care. They're trading. They're fine. But this is where the real money gets made. That's where the money, perpetuates, stays safe, grows safely, long term, really big. This is where that big smack comes, and you make a huge amount of money on the swing up. You can hopefully make a bunch of money on the down, on the crash, and then it gets real boring for a while as things kind of like recover, and then we get into a prolonged extension. So if you think about the dot-com bubble, right? You had that big run up, huge crash, quiet, 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 quiet. Let me pull it up on the screen. Um, big. Well, here we go. Yeah, big, nice trend up into the dot-com bubble, the top here in 2000. And then it kind of goes down, another run up into the housing crisis, crash. So we have a decade of nothing. And then it just kind of goes to where we are right now, which is just like this, massive, big extension, right? And that's kind of where we are. We've actually had a couple of interesting resets within the last this decade, 2020s, which is kind of interesting compared to the other ones, but whatever. So we want to be in the big run up. We want to catch the slam down and we want to get into and then I want to move mine in. That's why I have the algorithmic systems, because that plays the long game. And, that's where it really, builds over time, 20 years or so, something like that. Whereas we can do 20 years of returns in 1 year in a bubble, 1 or 2 years in a bubble. So this is why we're doing it. Okay. So let's get into what we got to cover today. First things first, Kimi K3 came out, open source Chinese model. Let's see what my AI tells me. Moonshot is 2.8 trillion parameter native. Sorry, I got lights in my face and my glasses are more helpful. Native multi-model with a 1 million token context window. K3 is live through Kimi and its API. Full weights are scheduled for July 27th, so we don't even know what the weights are yet. Moonshot says it remains behind the strongest proprietary models overall, but close enough. So they're not as good as Fable, GPT 5.6, but DeepSeek 4, but close enough across coding and knowledge work to challenge a durable 6 month US lead. So there is there's this meme that the US models are, 6 months ahead of Chinese models. And this is basically saying no, or well, it's saying two things. It's saying if that's true, if the U.S. models, so Claude or Anthropic and OpenAI, are indeed 6 months ahead, and Kimi K3 comes out and it beats these models in a number of benchmarks, then what that's saying is these models, OpenAI and Anthropic's models, are not being released. That's what it's saying. Or, so that's one, that means, okay, they are not releasing the model. They're keeping the same models in house and using it for their own stuff, which to build their new models, but to also run their business, to do research, to do a bunch of things, right? They've got all the money, they got all the, talent. They've got so much. So it's almost kind of like, well, if you had this super weapon, why would you release it to everybody if you could just use it for yourself to get ahead of everybody? Which probably explains why um, Anthropic is so like, oh, regulate me, oh, control me, daddy, because they know they're going to get caught, and they want to have that deniability to say, you know what, we told you we had these capabilities, and we needed to be reined in because we, can't be trusted or whatever. And by the way, they're also saying we're the only ones that can be trusted with this stuff, so we should be in charge of it all. Like it's stinky, very slimy. But okay, so if this is the case, that means these frontier labs have models that we don't get, and this Chinese model, the Kimi K3, is 6 months behind, but it's just exposing the fact that they're 6 months ahead, and we're just not getting it. So that's one side. The other side to it is, guess what? China actually is not 6 months behind us. They're like, it's been a week, right? It was a week since they released 5.6 and Grok 4.5 and released Fable, re-released Fable. By the way, the only reason that OpenAI, and in my opinion, the only reason OpenAI and Grok were released last week was because Fable was released, and they were just playing the game. If nobody released it, if Fable hadn't been brought back out, everybody kind of we would still be sitting this week saying, where's our Fable? Where's our Fable? And then Kimi K3 could have dropped, and we would have all went run into K3. And then everybody would have been like, oh man, we need our Fable. We need our 5.6. Model scarcity is weakening faster than expected. Yep. That pressure frontier lab margins and strengthen the application and near-term infrastructure demand cases. So that's important for us, while making long-run hardware returns conditional on workload growth outrunning efficiency. So yes, this is basically showing that these frontier models, while we think that they are the winners right now, they're like, they can do no wrong, and they're the most important part of AI. And if you're investing in, the AI trade, it's all about these companies. This is proving that the open source models are there. We've talked about this all week, where if you're a company and you've got proprietary IP and you're using Claude or OpenAI, you're just feeding them your IP. They're using it to train their own stuff, build their own knowledge base, keep their models in house, and learn to take down all their competitors. You have to assume that that's happening. So the move to open source, self-hosted is definitely going to be a major push in this, at least this probably next couple of quarters. And I think it'll continue to be a thing where data center buildouts will go from not only these massive data centers in the desert and in all these places, but also back to the basement of office buildings, where you'll have your own, you know, uh, a company with like 1,000 employees doesn't need a 5,000 acre data center. They need whatever, 10 racks. Maybe it's a 50,000 person company. They need 10 racks. Not every company needs, a city full of data centers. So that means there's going to be a lot of demand. There's going to be, if I have a data center that's going to be, let's say it's 10 racks, of capacity. And I'm doing stuff that's like kind of repetitive. Like if I'm finding solutions for where AI is coming into my business and it's repetitive, I don't need Vera Rubin, the NVIDIA Vera Rubin servers. I don't need those. I can get it on, I can go get some cheaper, H100s or something like that. I can go get those, or even DGS Sparks, or like a dozen MacBook. I don't know, or yeah, you just go get the silicon and do the stuff. You don't need a city, a data center the size of a city. You can just do this in the basement, and it's handling all your work for you. It's your IT staff's gonna, have kind of, you have to hire a little bit different type of staff, build it out, which is great. You got a lot of people are saying that a lot of people have been talking about the job loss, especially in IT and software development and everything like that, due to AI. But it's been exactly the opposite. Like they are hiring hand over fist in those places right now. Sure, they're laying people off, but it's just because like, well, we don't do that anymore. We don't need to do that anymore. So like let's just go. And then they're just kind of passing people around. Wages are, you're looking at 250 a year for kind of a mid-level developer. Um, and then as we get into these, bigger data center requirements, these sysadmins, network admins, and like managing these servers, they're coming into demand because you like physically have to do it. So it's going to be going away. The economists will be leaving the models and starting to move into the hardware, which, OpenAI did do their own chip, the jalapeno chip. So they are working to build their own chips. And, that's going to add competition. We talk about, when NVIDIA owns everything and you have no optionality, you kind of are forced to go out and do your own stuff. Thinking Machines released the Inkling model yesterday. This is the former CTO of OpenAI, Mira Murati, I think's her name, Italian Italian girl, lady, female. um, and she left, and I think she raised like $1 billion seed round. I don't know if it was a year ago, it might have been somewhere around a year ago, I think, where she did that. And this is their first offering. So it's a 975 billion parameter mixture of experts model, which is very cool, with 41 billion active parameters, native text, image auto reasoning, very cool, and up to 1 million contexts. Nice. It was pre-trained on 45 trillion tokens and trained on NVIDIA GB300s. Okay. NVL72 system. Thinking Machines explicitly positions it as a customizable base rather than the strongest model overall. That's what I'm talking about. This is the sort, and it's an open source model, by the way. This is what I'm talking about. This is if I'm, okay, you're a DoD contractor. You do contracts for the or Department of War, DoW, for the government, and the government says, you know what, we need you to have. I don't have to go to the military. Let's say you're a law firm. You're a law firm. You're a law firm. You got 300 lawyers across the country, 500 lawyers across the country. Lot of cases, a lot of stuff going on. And we know what law is. Like we understand it's very word dense. Everything is documented in paper, and emails and documents, everything like that. It's a little bit easier to process the stuff that can be processed in the law field, which is why it's kind of a big one that everybody's going after. So if you are if you need to have these models, and you also have to have, like, I can't let, in order to compete, we have to have the best model, right? So we can't be using, we need to have the best stuff available. Great. But we also want to control it ourselves. So we want it to be open source. So we have control. We control everything that's happening. Nobody else it's not living on somebody else's, in somebody else's model, getting processed, doing everything like, OpenAI or Anthropics. We need to have it on our own. Also, we can't do it with a Chinese model because our customers will leave. Or I can't do Kimi K3 because if any of our customers discover that we're using Chinese models for, their personal information, we're going to get sued or whatever. So what do you have here? you have an amazing tool in the market because now you can go out. This is not as, again, what I'm saying is it's not like GPT 5.6 or um, Fable level. In fact, Thinking Machines themselves is saying that it's not. But what it is a mixture of experts. And this is actually like super, super cool because you route your work to the appropriate AI model. Okay, the expert model. For example, over here, I have an Ask AI down here. Let's say, how old is Thinking Machines as, and how many models have. Okay, so this is just my little. I've added the little AI tool. It's an API connection to OpenRouter, and I just whenever I'm doing this sort of stuff, I can just ask questions on the fly. Now, what I'm going to show you here, like it's fairly fast. It's using GPT 4o Mini, OpenAI's GPT 4o Mini. We're currently operating on 5.6, extra high, fast, whatever. And I don't need Fable level. I don't need 5.6 level, Soul level AI to answer this little question. I can use a really cheap model that's fast and can basically go and Google stuff for me really quickly, right? That's kind of what it does. Thinking Machines Corporate was founded in 1982 and is well known for early work in parallel processing computers. The company is best known for a connection machine series of supercomputers. Okay, not that Thinking Machines, not that Thinking Machines, the AI company that just dropped their model yesterday. So there you go. Also, hey, good example. Sometimes you need the better machine. So since I don't have a mixture of experts, I'm just connected to this one. Um, Not that Thinking Machine is a company that I recently released a new AIM. However, specific details about the model's capability, performance, and market for further analysis it would be necessary to evaluate the model's features. Okay, great. So yeah, it doesn't really have. That's a great example. Why I need to have a mixture of expert tool down here in my Ask AI. I'll add that to my thing because basically it just goes and figures out which tool it needs to use. Probably doesn't have browsing enabled in that model. I don't know what it is, but it'll. So what it would do, what I would have it do is send the message to the router, the model router. The router looks at the question and says, "Oh, I know who should handle this job. Um, Aaron, come here. I need you to go answer this question for him." Great. Aaron's an expert at Googling like really last minute up to date AI stuff. Cool. Maybe I ask a math question. I gotta go get Randy. Randy's my math guy. Hey, Randy. And so it's just like you have a mixture of experts here available to just go and pull, and that's what they're doing, right? That's what they're doing. And so when I'm a U.S. company and and I'm thinking, you know what, um, I need to get off of Anthropic or OpenAI because I'm losing my IP and I just, it's not worth it anymore. You have NVIDIA has theirs, right? Which is super awesome. But now you have this one, and this one's super powerful too. Um, the model layer is becoming multipolar, customizable. That broadens workload creation and confirm GB300 demand. Interesting. Okay. Okay. What's the GB300 chip? Let's see what it's got for us. GB300 chip, specialized AI accelerator developed by Gear Falcon Technologies, designed to enhance machine learning and artificial intelligence. It focuses on providing efficient product. Okay, so this is interesting. Okay, so how does it compare to NVIDIA GPUs or Google's TPUs? Let's see if we can start getting some better responses here from my AI. That was a tough one. NVIDIA GPUs and Google GPUs serve similar purposes in accelerated AI workloads, but they have distinct characteristics. NVIDIA GPUs, they're versatile. They widely used across various applications. NVIDIA has a robust software ecosystem. CUDA, of course, performance known for high performance. Google TPUs. These are specialized TPUs specifically designed for machine learning tasks, particularly for TensorFlow workloads, not CUDA. They are optimized for matrix optimizations, which are common in neural networks. So machine learning. Integration TPUs are tightly integrated with Google Cloud services, making them ideal for users within Google Cloud. So if you're not on Google Cloud, you don't really get the TPU. TPUs can offer cost advantages for large-scale AI tasks due to their design and efficiency in handling specific workloads. In summary, NVIDIA GPUs provide versatility, strong, and okay. So um, this kind of NVIDIA GB300. Oh, I put G300, GB300. Okay. Which is it's the Hopper. Okay, so that's the last generation, last year's model, I believe. The Vera Rubin's the next model coming out. So this is probably the best model that's out there, the GB300. It's probably the most available of the most advanced, and the fact that they got them is pretty cool. That's a startup, that they were able to get GB300s. So okay, I'm not going to talk about TSMC because we did that one yesterday. Reported earnings. Well, I'll talk about it. It came out yesterday, got sold off on the thing. People were everybody right now is a little nervous of the bubble, the AI bubble. And the day before, IBM came out and guided lower. They got hit by about 12%. And then yesterday, Taiwan Semi came out and they did not guide lower. They in fact said everything great. They just are spending a little bit more money and they got a little bit punished. But look, we've ran up. Let's have a look at where we are on TSM. Here, we went up. Dude, we've been just like, that's a 400-500% move in like 2 years. So to take a little bit of a haircut this week after reporting really amazing earnings and profits. So we almost got that 20% correction almost perfectly today. And actually it was something I was paying attention to is I want to see if we can get down to the 200 SMA. We might have been done today. This might, this is the 100. There's a 50-week or 50-day, 100-day, 200-day, mildly interesting, just kind of markers in the road. There's no magic to it other than it's self-fulfilling because everybody else uses it to kind of guide their positioning too, like guide their work. So I don't believe that it's magic that we got to, that we get to the 200-day and things turn around or whatever, the 100 or, whatever day you want to look at. But I think what's happening is we've reshifted expectations going into earnings. And if we just come in with everything that everybody already knows and we keep kind of doing the same thing, the market will probably continue to weaken. Maybe even just trade sideways for a while until something new comes out and forces more investment and more exposure. But yeah, right now, good news got hit. Think about that. In a bull market, in a strong, healthy, early bull market, good news gets bought. So, and bad news gets bought, actually. So we're kind of there. We're about a day into it. Now this is going to be Taiwan Semi is affected by everything else in the earnings season. So as they come in, it could come in. Look, we're in a neutral market regime. We're not in a strong bull market regime anymore. So dips are going, news is going to be sold more than it's going to be bought. And that's just kind of a thing. And it's just unwinding a 400 or 500% gain. There's definitely a reason to take money off the table. And it happened in an event. Like if you're managing $1 billion, multi-billion dollar in capital and, something comes out and you're like, well, they just didn't blow my socks off. Let's see what else happens this quarter. We can go put our money in Apple. It's ripping, man. We can go sit in Apple and, kind of sit back and watch this thing happen. Not have exposure. Like ironically, Apple doesn't really have the exposure to AI, and that's probably why it's like getting so, handled so well. Okay, Broadcom. Here is an interesting part to the thing. This is foreshadowing something we're going to talk about here in a little bit. But Broadcom makes AI financing structure a present mechanism. Basically, who was it? Somebody, a customer rack structure in which an investor partner owns custom XPU racks, and Broadcom backstops customer lease obligations with the maximum continued exposure to $29 billion. So what we're saying here is this is like it's being financed. Broadcom they're assuming the financial risk of this investment. Now it's good because why would they do it if they didn't believe that they had, pricing power, and they didn't believe that it was a good deal for themselves, they wouldn't do it probably. Or that's one, or two, it's a Hail Mary. So this would be a Hail Mary really early in the whole environment. We haven't had a Hail Mary like this early. So it's a little kind of, it's probably more of a like, wow, yes, we know it's a circular, you invest in me, I invest in you a bunch of money, use that money to go buy my GPUs. And then, we all kind of move our money through ourselves and recycle it around. It makes my income for the quarter look really good, and it shows that you're doing stuff. Plus, you're a private company; you don't have to report this sort of stuff. It's all kind of a circular thing, and everybody knows it. But as only becomes an issue, really becomes an issue when debt financing becomes a big part of it, because that's where obligations are, a lot worse. Okay, that happened there. Model scarcity broke faster than the build out. We summarize that. Competition redistributes AI rents. Yep. So that's the same thing. Model scarcity is not as scarce as we thought it was 24 hours ago. Lower model layer processing favorable for applications. So you can do more with cheaper models, and you don't have to, wait and beg the big models to give you resets every day. Open competition reaches both scales. So that's the most important thing in the last 24 hours was the Kimi K3. Okay. How does that affect our current model thesis? See, the AI build out, this is our thesis, our model. The AI build out is real, but model scarcity is ending before the infrastructure liabilities mature. So that changed. That was the last 24 hours. And that could be why, one of the reasons why we were, down a couple percent overnight. The markets were down, and we still had a, couple down day today. We had a bit of a bounce, but, it didn't recover. The AA build out is real, but model scarcity is ending before the infrastructure liabilities mature. So that's probably why people probably lightened up their load, their exposure heading into typically July and August are some of the quietest volume times of the year. So, that could be another reason. Getting ready to redeploy capital coming into September, figuring out, as we digest the earnings season, like start deploying capital again. Maybe, that could be something. We're in it. Like we're here every day figuring this out, just like them. But a lot of them might be on vacation. Value is migrating from closed model rents toward application. Closed model rents is your $100 a month or $200 a month for Claude. That's what that means. Towards applications and physical bottlenecks, and we're already positioning for that. We're getting ourselves positioned. The bull case requires independent paid workloads to grow faster than token prices. So basically, the demand for AI needs to outpace the price of tokens. So what changed? Frontier model scarcity moved from durable moat to actively weakening, and wouldn't be surprised if like a new model dropped next week to kind of like really, to lead Fable or somewhere around there. Closed lab margin pressure moved from a long-term risk to a current competitive. Near-term hardware demand strengthened, unchanged. Leading edge compute, packaging, networking, cooling, all that bottleneck still there. But that's our main thing. We are watching K3 and cost per task token efficiency. So is it getting more efficient? They're releasing the July 27th. They're a week from 10 days from now. They're releasing their full weights. OpenAI Anthropic release pricing and product response to to this K3. Also, that's 10 days from now. If we're saying, well, what we're now focused on is July 27th when K3 releases their weights, and that's 10 days, man. OpenAI, Anthropic, Google was supposed to drop their Gemini yesterday, and they pulled it. So maybe they're going to wait till the 27th to launch it, and they're going to try to get back in the game. Grok came out with 4.5 last week, and it's awesome. So maybe they'll start releasing things a little bit faster. Okay, now where are we in the bubble? Returns, repricing the model, commoditization are present. Operating demand remains strong. A broad capacity break or credit break is not confirmed. So the credit break is something, again, foreshadowing, is something we got to keep our eyes on. TSMC, Broadcom confirmed revenue, backlog scarcity, and cash conversion weakening. Model scarcity is weakening. Now, I want to go look, I'm older than you probably. I was around for the dot-com bubble. I know what I remember. There were things that we thought were the most important part of the dot-com build out, and then everybody was fully invested in them, and then they just started to drop and kind of like petered out for the rest of the bubble. And they were up there. They stayed up there until everything crashed, but they didn't move really. And so, the money moved from, it kept moving to the new thing. And, so it started out like if anything that was, technology related started getting investment. And then it was like companies that were, had websites and they went public and they were doing, they were a website that was public, and that was kind of like, whoa, you're just a website and you're a $100 million company or whatever. I remember traffic was like a big metric back then. Traffic to your website. You didn't sell anything, you didn't do anything, but you just had 1,000,000 people a day come to your website or something for some reason. And then then we started getting into infrastructure, so we got to get, Cisco and some microsystems and Dell and IBM and, all that, and software kind of was the thing. And then, Microsoft and things, Sun Microsystems again. And then we got into, towards the end, it was a little bit, what was it? Towards the end. That's when Google came out, like search became a big thing too. And kind of whatever. So it evolved around that 5-year period. And that's certainly going to happen here. We thought if you'd have thought that the big winner back then, a lot of people believed Yahoo was going to be the big winner out of it all, and they weren't. A lot of people thought Cisco was going to the most important thing, and it took 20 some odd years to get back to the same price it had, in 2000. So bubbles are interesting, but again, like I say, if you can be in the earlier sides of it and catch the rotation, get what's hot and what people are not fully pricing in yet. And I know that we're, because we priced in the build out or the bottleneck build out has been kind of priced in for the last year. I think I wrote my first article about it. It was probably like May or June last year. And that's when it all really started to take off. But so we're like a year into that, right? And we know it's going to move around, like networking and storage and memory and HVAC and things like that are part of that. That's going to be a thing, but also thinking about the idea. Remember, we got to what don't we know? And we're trying to get I didn't know that Google was probably going to be the biggest beneficiary of the dot-com bubble. I didn't really. It didn't become obvious because it was like the end of the bubble when they kind of showed up, so that's when it kind of like turned into something cool. I think it was after the bubble burst even. So it is like, you just don't know who's going to win and what's going to become important there. But at the moment, you can just kind of play ahead. Okay, model scarcity, we already talked about that. Equity returns. Strong results no longer guarantee positive price response. We saw that with TSMC, okay? And that's what I'm saying. Like, pay attention to Pay attention to that. Like the GB300 was used by Thinking Systems, so that's an NVIDIA product. I don't think NVIDIA really got, like they're not going to get a pop on that. Um, Capacity break, no broad cancellation, utilization, lead time, so this is what we're focused on trying to find right now, these last two parts. Capacity break, where people are like, you know what? I don't need 1,000, I don't need 1,000 GPUs anymore. I'm going to do it with, 100 TPUs, or I'm going to do it, we're just going to use local, we're going to do something else or whatever. And, that could be something. Or, this would be a bit of a cycle, right? A credit break. So financing structures are present, losses, markdowns, and refinancing stress are not. So there's good financing deals happening. There's financing deals happening, I guess I should say. People are getting money, moving around to do stuff, getting paid, to put deals together and make stuff happen. When a deal breaks, when we saw with Oracle, we saw with CoreWeave, we saw some of these heavily debt-ridden companies, the hyperscalers, they just went into massive debt to build out their data centers, to build out their clouds, and there was some risk. There was a lot of concern there. They seem to be doing okay at the moment, but that's something we got to pay attention to. With what just happened with Broadcom doing this, seller financing sort of deal with one of their customers, it is a little bit of a, we know where the cracks are when you see that. That's what the nice thing about public companies is. We know where the cracks will come. We know who to watch for those cracks. We don't know what we don't know, but at least we know what to watch in that sense. Okay. What's confirmed? K3 is live. Inkling's open weights, TSMC, Broadcom. Okay. What needs to be understood is K3 competitive? And not just per token or vendor benchmark, like seeing it actually work. Whether open models create independent workloads or mainly shift existing demand between providers. That's also another point, right? Like I'm saying, maybe we're just going to self-host and do our own stuff. And you're like, oh, it's super cheap for the first couple of companies that do it. And then when it's like a bottleneck because everybody's doing it, it's like, oh, that's no longer a cheaper outcome. Like we're going to find out. Whether open models create independent workloads or mainly shift existing demand between providers. We already said that. Okay, but how much better the US labs internal checkpoints are than public releases. This is that game theory. Like, what's gonna happen? OpenAI and Anthropic and SpaceX, like you guys and Gemini, you guys are just sitting on it. And Google, so you guys are just sitting on these awesome models. Is that true? Like, or is China really behind us? Weather model margin compressions. We still need confirmation. The weights on K3, again, it's probably going to be buried in 10 days. It's probably going to be buried news. We're going to be on to, 3 models, DeepSeek, and, like three new models have released. They're at least as good as K3 or right around K3. And they're like, well, we don't really care anymore. I'm guessing. Inference volume grows faster than price per token. Okay, that's interesting. Installed capacity remains highly utilized. Data center rents, renewals, private credit marks, and refinancing remain healthy. That's what we're looking for going into earnings, in through earnings. Everything needs to be status quo. No like surprises that capacity and demand is lower. 3 to 6 months from now, every day I try to update this part 2. What's going on in the future? What's going to be the thing we're worried about? We're focused on that's going to have an impact to this market in the next month. OpenAI, Anthropic release new things. API pricing improves or doesn't. Reasoning efficiency and product bundling. Okay, so we'll see what happens in the next month. That's what that is. Next 2 months or so. Open model adoption. We're seeing that with the K3, Kimi K3, and the Inkling. We want to see like another couple of models. Like if you can have non-Chinese models, no offense to the Chinese models, but it's just not gonna, like, people are not gonna, KLM 5.2, I think. There's a number of DeepSeek, there's a number of great Chinese models, but you're definitely not going to be able to work with the US government if you're using Chinese models. You're probably going to get when you get busted, like a client or a customer or somebody like that, um, pulls out because you're using that model and they make it public, or people just start saying, oh yeah, they're just using Chinese models. It's going to be a bad thing. It's going to be a bad look for a lot of people are just going to have to. There's people that just don't know the difference, and there's people who are just not going to do it, right? So whether it's true or not, is irrelevant. That's going to be a thing. So more US models probably going to be out. 1 to 3 months workload is elasticity, inference volume, and cloud AI revenue versus token price. Okay. The next 2 to 4 months, physical conversion, GPUs, high bandwidth memory, networking, power cooling. This is our sweet spot. This is what we're trying to be positioned for in the next 2 to 4 months. Liability health. We're thinking that credit will be a bit of an issue into Q4 or maybe Q1 of 2027. That's when we would do it. But we're going to hopefully we can keep pushing that liability health further down the road. Now, I'll be moving. Basically, I kind of had my positioning and everything like that shared, but it was with a much smaller account. I will be bringing in. Why does it have dollar amounts? I told it not to do dollar amounts. I want to have percentage. Anyway, I'm mostly in cash on this AI trade. I'm coming into this portion of the market with some capital, some dry powder ready to deploy. And I have a plan of how I'm going to, I think it just picked dollar amounts and whatever. I'd rather have the right amount on there than just a random amount, but I would prefer just to have the percentage because it's easier for people to see percentages than, and manage percentages than it is to see, a big dollar amount or a small dollar amount, whoever you are. So, it should be, like a 10%. That should be more like a 15%, 20%, 20%, 22%. I don't know, whatever, 25% is what this should be, not dollar amounts. But so let's just say I'm just getting into the AI trade. And how am I going to do it? This is my plan. Okay. First step, tape stabilization. So I'm only going to go in and put in a little bit of capital based on something like, which, we'll determine, but, like TSM, Taiwan Semi getting down to the 200 day, maybe putting a little nibble on at 100 days, everything that's at 100 days, that's in our, that is in our thesis, that is part of our portfolio, will be something that so right now it would say, start looking to get 4 to 5% position of TSM in there. Get trim. Well, I can't trim. I like whatever. I need to. That's kind of my plan. This is what I'll be working on over the weekend. Is get my portfolio deployment. It'll come in phases, right? Before earnings, just kind of get in there and get ready. After we learn more information from earnings, we'll have a different portfolio structure. So we'll be moving money, maybe we put it, like 10% in to start, Monday or, next week. And then we start seeing like, okay, who do we have? I think we got Google. I think we got Broad. We got a number of names next week reporting. And so once we get that, maybe we'll say, oh, okay, add another 15% to to these positions. Boom, boom, boom. And then we, looking at different things, maybe different individual products will come in with a 20% allocation, utilization proof. Now, this could all happen next week, but it's probably going to be like over the course of earnings season, which, Micron is either the last to report or the first to report in the following season, depending on how you look at it, around September. It's August, September. So we've still got another, like 2 months to kind of work through some of these things. Yeah, it's like condensed. There's a few that are condensed in the middle, but overall, that's where we're at. Okay, so that's pretty much what we're looking at. Pretty good day for some names, outperforming Nasdaq today. SpaceX continues to get hurt. Taiwan Semi still down from the news, so this is and this is relative to Nasdaq. So okay, this is all the same as it was yesterday. Full stack AI build out, compute power, cooling, memory is these are the two things we're focused on. Permission identity, that was something that we're going to be keeping an eye on, and we think some of the cyber names probably are going to take the lead in that. So we're probably going to start coverage on some cyber products, regulation and government gating. I don't know. And then this is my own stuff. So here's my workbench, things I need to do, my holdings, my model plans, my research stuff. This is pretty much my research stuff. So I want to get in, and, build up some of these notebooks on the individual ones. And, that's how I feed it. Is I'll be working through these workbooks on some things. And a lot of times I'll just write and I'll put it in there and that kind of group. So, okay, that's what we're doing here. Thanks for sitting through it. If you got any questions, put it in the comments. This will come out on the email to the email list. So if you get the email and you want to chat about this sort of stuff, reach out, feel free to reply. If you're in our, if you're in Slack group, we can chat in there. Or, hit me on Twitter. I'm on Twitter quite a bit. Doing the old shit posting. Love you guys. It's Friday. Have a wonderful weekend.